Hey everyone, welcome back to Corporate Decoder. Today we're diving into an AutoZone Form 8K report, and let me tell you, it's not just about car parts and oil changes. There's a financial engine humming under the hood, and we're here to see if it's running smoothly or if it's time for a tune-up. In this video, we will discuss the report's key events and financials. Buckle up. This report is dated March 4, 2025. That's the day AutoZone had something important to tell the Securities and Exchange Commission, or SEC. It's like sending a message to all investors, big and small, about what's going on. The main headline here is about AutoZone's financial health, which is disclosed in a press release. Companies use press releases to quickly get information out to the public, kind of like a news flash about their performance. Let's see what the release contains. The actual press release is attached as an exhibit. Think of it like evidence supporting what's in the report. Alright, let's pretend we just clicked on that Exhibit 99.1 link and are now looking at the actual press release. We can now get into the nitty-gritty. The Statement of Operations, also known as the income statement, shows how much money the company made or lost over a certain period. It's like the final score of a game, telling you if the company won or lost financially. Let's focus on net sales, or the total revenue after discounts and returns. This tells us how many car parts and accessories AutoZone sold. For the quarter, net sales were $3.87 billion. Sales can tell us about how well the company is doing compared to previous years. Next up, gross profit. Gross profit represents net sales minus the cost of goods sold. Basically, this is how much money AutoZone made after subtracting the direct costs of getting the products to the customers. It was $2.05 billion. Now, running a business isn't free, so we should look at selling, general, and administrative expenses. This is the cost of running the business, from salaries to advertising. This cost for AutoZone was $1.38 billion. Here's the bottom line. Net income is the profit after all expenses, including taxes, have been paid. It's the real profit that goes into the company's pocket. AutoZone's net income was $607.7 million. This can then be used to invest more into the company, return to the shareholders via dividends, or anything else. Finally, let's touch on earnings per share, or EPS. Diluted earnings per share is a crucial number for investors. It basically divides the net income by the number of shares to determine the value of a single share. AutoZone's diluted EPS was $34.12. It's very important to look at how the EPS grows over time, as it is a sign of the company's success. Cash flow from operations is a great indicator of how much money the company is actually making. It measures how much cash a company generates from its normal business operations. AutoZone's cash flow from operations was $480.4 million. A big outflow of cash is purchases of merchandise. It represents what the company spends to buy the merchandise that they sell in their stores. AutoZone spent $2.29 billion on that. Another big outflow of cash is repurchases of common stock. This means that the company is buying back its own shares. This can increase the stock price by reducing the number of shares available. AutoZone spent $600.0 million buying back shares. Lastly, let's check the cash and cash equivalents. This is the most liquid assets the company owns. It's important to have this figure be positive. AutoZone's cash and cash equivalents totaled $235.4 million. So what's the story here? AutoZone appears to be doing pretty well. Sales are strong and they're making a solid profit. Now let's zoom out and consider the bigger picture. AutoZone plays in a pretty stable industry. People will always need to fix their cars, no matter what the economy is doing. This gives AutoZone a bit of a safety net compared to other companies that might depend more on people feeling rich and spending freely. But it's not all smooth driving. Competition is tough in the auto parts world. They are competing against giants like Advance Auto Parts and O'Reilly Automotive. Online retailers like Amazon are also trying to steal a piece of the pie. AutoZone needs to stay on its toes, offering good prices and customer service to keep people coming back. Based on these numbers, AutoZone seems to be a pretty solid company. They're making money, they're buying back their stock, and they're sitting on a decent pile of cash. They are using this money wisely to buy back shares of their stock, which further increases the value of their company, making it a good investment. However, they do have competitors they need to be mindful of. Of course, you should always do your own research and not rely on just one video when making important investment decisions. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, give us a like, drop a comment, and subscribe for more financial deep dives. Until next time, keep decoding.